Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. And, of course, the TGIF. Let's make it a great one. My guest today, Laura Johnson. Laura, thank you so much for being here.
My pleasure.
We're going to be out here growling and prowling with all you tigers and tigresses, folks. And Laura's here because we're going to be talking the top of the market, and we're going to be talking about what you may want to be doing at the top of the market. Let's take a look at one of our 4 agreements. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We had the Dow Industrials up 61, NASDAQ was up 14, S&Ps were up 5.5, gold contract up $1.20, trading at $1,351 an ounce. Silver down 27 cents at $22.55 an ounce. Platinum up $3 at $1,455 an ounce. Copper flat at $3.26 a pound. Light sweet crude up 87 cents, trading at $97.98 a barrel. Bonds up 7 ticks. The 30-year was up 7 ticks at 135. The 10-year, folks, was up 5 ticks at 127. King dollar up 10 ticks, trading out at 79.25. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, cash S&P, folks. The high of Tuesday was 1,759. We got out to the 1,759.20, which is a mind blower. We're talking about 12 100ths of a tick away from it. Bottom line is that it's S&P is at that 1758, and we are more than likely we're going to see that 1777 get hit. We did 634 million out there versus 715. Dow Industrials. What do we do with the Dow Industrials? Dow Industrials are at 15,570. That last high that was generated out there is the 15,709. I expect more than likely you're going to see it get hit. Now, the composite, different ball game, folks. And we had talked about the A to B equals C to D structure off the bottom of 2009. That's where the 1776 number comes from. The composite has already done that. And what you have with the composite is this. We're at 39.43. The high that was generated on Tuesday was 39.47. You got to 39.61. You closed below it. Bottom line, I suspect the composite is at its high. And the reason I'm saying that, folks, is this. Is that if we go over to the NDX 100, and we look at the NDX 100, it had every right today to blast higher in a dramatic way. Why? Because you had Amazon up huge, okay? Amazon was up 31 bucks. That put some juice into it. Alexa Pharmaceutical was up 8 bucks. That's decent juice. Microsoft was up 2 bucks. But bottom line, guess what? It just couldn't. It was up, okay, but it was not up like it should be up. The small caps. Now, the small caps are screaming. And what the small caps did is this. The small caps failed. Small caps got over the high, closed underneath it, did all of the above. So next week, what does that mean next week? I suspect you'll have the S&P doesn't want to go hit that level. NASDAQ composite, I think we're done. Dow Industrials wants to hit the high. Gold, what did the gold contract do? This is what we have with gold. She's trading out right now at 1351. She's building cause to get into the swing point that was generated out there in September, which is the 1375. And I suspect what we're going to see is that we're going to see that run up to the 1434 level. Bonds, this is a beautiful thing with bonds, no doubt. What we have with bonds is that interest rates want to go back down. The 30-year bond in the last month has just gone from 128 to 135. It looks like it wants to go to 140. The 10-year, same type of situation. We have with the yield on the 10-year sitting at 2.505. That 10-year, if you remember, is at the low rate of the 10-year was 1.67. We went from 1.67 up to 2.99. Now we're going the other way. What you're going to see here is that, bottom line, rates, once again, look to me like they're going to go south. Now, King Dollar. Let's take a look at King Dollar. What King Dollar did this week, folks, is broke down. Got below the swing point. Has light of volume, but guess what? King Dollar's got to get up to a price point of this 79.72, and right now we're at 79.25, in order to get traction for higher price. You know, that's the way this baby is set up right now. You know, we'll see what next week brings, meaning that you have the end of the month, you have window dressing, and of course what window dressing is that, you know, all the big hedge funds, all the broker dealers, they like to basically keep the stocks up, push them up a little bit higher to, you know, keep their book straight, and then you have the natural buying that comes in from the IRAs, you know what I'm saying, at the end of the day. So, bottom line, my take at this particular point, folks, is that the NASDAQ composite is at a high. The S&Ps want to go to that 1776, which is not that much more, and the Dow wants to go test it out here. I guess today, this is a perfect time for this, folks, and this is why. I was talking with Laura and my buddy Mark, and, you know, we were out and we were talking about the market in general, and Laura is into the insurance market, into the annuity market.
Correct.
And, you know, there's a lot of miseducation out there about what is out there that can protect you in markets in general. Okay? Mm-hmm. So talk to me first. Well, first off, thanks for being here.
My pleasure.
Really
Thank
appreciate
you for having me.
Absolutely. So talk to me first about what is an annuity?
Well, annuities basically are insurance for your retirement. But there's a lot of different types of annuity, too, so it's kind of difficult to answer that question. Is it an insurance product? But there's a lot of different kinds out there.
Right.
Yeah.
And my perception, okay, is that annuities have had a bad name, you know, in general.
Yeah.
Okay? Talk to me about the type of annuity that you sell, and talk to me about what that means. And this is intriguing, folks, if you don't know this, as to how this works. Because what happens, well, here, talk to me about that. How does that work?
Well, let's go through like what the different types of annuities are.
Okay,
first.
cool.
The one that a lot of people know of is what's called a variable annuity.
Yes.
And in a variable annuity, your money is at market risk.
Okay.
In that your cash bucket is at market risk.
Right.
Sometimes you can put different riders on to protect it, but that's an additional fee on top of the fees that are involved in the variable annuities. So a lot of times you'll hear people say there's a lot of fees involved, and with variable annuities there are. And so then there's another type of annuity called a SPIA, which is a single premium immediate annuity. Those are the type of annuities that you see often in like pension plans, where you give the insurance company a single lump of money, and they're going to give you like a payout either for your life, for 10 years, joint,
yes.
Something like that. But you don't have access to your cash.
Okay.
So those two annuities are kind of why they get a bad rap. Not saying that either one of them is necessarily bad, but in variable annuities, they're really for younger people and that have time to make up in the market.
Sure.
And there's a lot of fees involved in that.
Right.
Single premium annuity, you're locked in. You can't change your mind. You can't stop the payments. You can't go back to accessing your cash.
Okay.
And so it limits what you're able to do.
Right.
And then there's a third type of annuity called a fixed or fixed indexed annuity.
Fixed index, okay.
Fixed index, yeah. And they are, those type of annuities, your principal is always protected. So
if I give you $100,000, my principal is protected.
The principal is protected, yeah. Okay. Unless you take withdrawals out, of course.
Sure,
but
sure.
Yeah,
right.
And then it's either, your gain is going to either be based on a fixed amount, a fixed interest rate, or it's going to be tied to an index.
Okay.
So maybe the S&P,
sure.
Whatever the index is. The biggest advantage of those type of annuities is that your principal, again, is protected, but you only, once you get a gain, let's say the market goes up 10%,
yes.
you're going to get a percentage of that gain. So maybe you may get 6.5% of the gain.
Okay.
If the market goes down, you don't lose your money.
At all?
No. And not only that, but once you gained, your gain is actually locked in. And so they've been...
Even if the market goes down after?
Even if the market goes down after that, your gain is still locked in.
So
Correct.
Okay, so folks, if you're watching Tiger TV, you're going to see this, because this is pretty sick. So you're telling me that, so let's say 3 months ago, right? Mm-hmm. The S&P was at 1590.
Correct.
Right? And we ride all the way up. Now we're at 1760. So if someone had bought 3 months ago, they get all of this, and see, I'm a bear. Do you know what a bear is? See, everyone knows, I must look like a bear, see, because I think this market's going down.
Right.
So if this market goes all the way down to 15, 16, they're still locked in at the highs right now?
They're locked in. Yeah, once you get your gain, it's locked in.
Wednesday, October